Right in. We're doing a deep dive today into the real forces that move global financial markets.
Right. And we're really going to try and pin down a concept that you hear all the time: smart money. Oh.
It gets thrown around a lot. So
Right.
what are we actually talking about? It's not one single investor, is it?
No, not at all. You should think of it as a collective force. We're talking about the big players.
Like the major banks, the huge hedge funds.
Exactly. The institutional trading desks, and also the more specialized groups like market makers and liquidity providers. They're the ones making sure all that cash can actually move around.
And the sheer scale of their power. I mean, it's pretty staggering. The research we looked at was very clear.
Oh, for sure.
Smart money controls over 75% of the daily foreign exchange volume, the FX market,
And to give you some real context for that number, that's roughly $5.7 trillion
a day.
every single day. So, when you have 3/4 of the market concentrated in just a handful of players, their actions aren't just influencing the market.
They pretty much are the market.
They are the market structure, yes.
And some of their tactics can be, well, pretty ruthless. We know hedge funds drive volatility, but what really stood out was the use of algorithms to target smaller investors.
The retail stop hunts.
Yeah.
That's a controversial tactic, but a very real one.
So break that down for us. What does that mean, hunting retail stops?
Well, a retail stop is just a preset order a small trader uses to, limit their potential losses on a trade.
Oh.
These algorithms are programmed to push the price just enough, just to that specific level, to trigger a whole cascade of those stop orders.
Forcing all the small guys out of their positions.
Exactly. It forces them out cheap, and in the process, it generates a huge pool of instant liquidity that the institution can then use to fill their own massive order.
Wow. So they're exploiting retail positions just to serve their own needs.
That's a good way to put it.
This just completely reframes everything.
Yeah.
Because we're all taught to look at technical indicators, right? The moving averages, the chart patterns.
Of course. But if you're an institution that makes up 3/4 of the market, why would you care about an indicator designed for the other 25%?
You wouldn't. It's irrelevant.
They don't. The fundamental reason asset prices shift is based on liquidity. It's all about the need to fill those gigantic institutional orders.
So here's the question then. How do they actually place a, say, billion-dollar trade without sending the price flying instantly? Why doesn't the market just explode?
That's the million-dollar question, or I guess the billion-dollar question.
Right.
It all comes down to a concept called liquidity zones.
Okay.
You can just think of a liquidity zone as a sort of high-traffic area on the price chart. It's a level where institutions know there will be enough opposing orders waiting to absorb their huge volume.
So they can get their trade filled without causing massive, slippage.
Exactly, slippage, which is just the difference between the price they wanted and the price they actually got. These huge capital flows are what create and govern market activity. They're like hidden anchors.
This reframes how you should look at any chart. The main takeaway for you listening has to be that this large-scale institutional capital flow is the primary driver.
Right. Traditional analysis becomes, at best, a secondary concern.
It really does.
And it leaves you with a really profound question for your own learning journey.
Go on.
If 3/4 of all that daily trading volume is just about filling massive orders in these very specific liquidity zones, what is the actual real-world value of trying to predict the market, using indicators designed for the tiny fraction that's left?
That's powerful. It means if the engine of the market is institutional need, you have to focus on where they're likely operating.
Not just where a line happens to cross on a chart.
Think about the source of the force, not just the movement it creates. A lot to think about there.